let's go to page number 7. Waivers, exemptions, and exclusions. Generally, there aren't any. I say that, and there's a whole list on page number 7, right? So let's just start with this. That paragraph, it's letter F1. Generally, you can't waive flood insurance. But the NFIP has a provision that says if you have this, then you don't need that. It's called a policy. It's called a detached garage policy provision. We're going to break that down later. Number 3, the regulation has a detached structure waiver where the lender can say, hey, we're not requiring flood insurance, and it's because the loan, the collateral has met certain criteria, but you still want to tell the borrower it's in their best interest to get flood insurance. Again, we'll break that one down later. Loan participations. If you're the lead bank, yes, you're all in. You have to do flood insurance, but if you're a participating bank, not the lead, you still need to do your due diligence on the lead bank to ensure that they've dotted the I's and crossed the T's. Number 5, I've never seen, but it's written into the rules, so we talk about it, but we'll be very brief. There's a thing called a policy of self-assurance satisfactory to the administrator of FEMA. Never ran into one. I've been doing this 20 years. My boss has been doing it 30 plus years. He's never ran into it. So it's in the regulation, but not something that we see. Number 6, also few and far between and often misunderstood. What it says is the loan is $5,000 or less, but there's qualifiers. The original principal balance, not what it's paid down to, the original principal balance was $5,000 or less and had a term of 1 year or less. So loans that pay down don't even qualify for this. Now, if we're talking about a loan that has a balance of $5,000 or less and potentially taking collateral in a 100-year floodplain that triggers all the flood insurance, it's probably best to encourage the borrower to go find some different collateral because it's going to be way too costly to use that as collateral in connection with this transaction. But in the event that you're here and you meet the criteria in number 6, understand you still have to do a flood determination. You still have to provide the notice. The only thing you're exempt from in number 6, if the criteria is met, is the requirement that you make them purchase flood insurance as a condition of making the loan. So you still have to play out the other aspects of the flood insurance game, if you will. Number 7, other real estate owned. That's real estate you own. As the bank, you are not required to follow the flood insurance rules there. They're not subject to those types of transactions.